Hello, everybody. Hassan here, engineer, MBA, and investor. In today's video, I want to talk about Nassim Taleb paper, or in other words, black paper on Bitcoin. I want to talk about this black paper. I want to go all over it. I want to really debunk some of the topics that he stated in that paper and why we believe that he is wrong about Bitcoin and his base thesis about Bitcoin is wrong. Now, before we do that, guys, before we talk about this paper, do like this video, guys. Smash that like button, destroy that like button, really helps this channel. If you haven't subscribed, what are you waiting for, guys? Subscribe, hit that notification bell for our videos to get you faster. And if you guys have any comments, feedback, input about this black paper by Nassim Taleb, leave it in the comments below, guys. I'm curious to see what you guys think. I'm curious to see what you guys thought when you read this paper. If you haven't read it, are you going to read it? And if you did read it, what are your thoughts? What do you think he sort of missed out on? And if you actually agree with him, let me know, right? Do your own informed opinion. So I just want to maybe, start with a couple of notes here that Nassim Taleb is actually really well known in the statistics industry, mathematics. On social media, he has a huge following, right? Really huge following. He's really known in several universities. So for him to go about, a paper like this, you can already tell that a lot of people got behind this paper. It's been mentioned in legacy media, and also, another note is that he wrote several books that have been quoted for years and years, such as Anti-Fragile, the book, or Black Swan. And in fact, the pandemic was a Black Swan event, right? So he is quoted in many literature, he is quoted in many legacy media outlets, and many investors and analysts really look at his work and use some of his theories to sort of explain investments and so on. So it's really important that we actually take a pause here and look at the fact that he put significant time to write this paper. I will say one thing though, is that I noticed that when I read this paper, he was literally the only author. I mean, I would expect someone that writes something about this big, because Bitcoin is a big topic, right? It's not just a small technology that you can sort of understand. And I mean, he does go over Bitcoin, and I will give him props over understanding maybe the basics of Bitcoin. But having co-authors would be a quite interesting feat, and it would actually show collaboration rather than the bravado of just being a single author. That's my opinion. It doesn't really matter, but in a sense, it does because Bitcoin is such a huge market, and he talks about economy, and he talks about regulations, governments. He talks about the history. I think it'd be a good idea to have co-authors, but maybe this is the style. I haven't read all his papers, obviously, from other unrelated fields than Bitcoin, but so obviously he talks a little bit here in the abstract, and I won't go over the abstract, and I probably won't even talk about the price chart and so on. Not because they're slightly outdated. This was a paper from a few weeks ago. Actually, it wasn't that long ago, but more like it doesn't actually matter the price of Bitcoin right now as it stands. What does matter is some of his comments he made, right? So first of all, he sort of opens up the paper on about the Monte Carlo simulation and talking about Bitcoin, the history of Bitcoin, and the white paper of Satoshi Nakamoto. Talks a little bit about the technology, the Merkle 3. These are software terms, right? These are software computer science terms. And I'm quite happy that he actually brought those up because it shows that he has read the white paper somewhat and he has somewhat understood the basics of Bitcoin, right? The fact that it's an open ledger, it's a public ledger, it is not possible to modify the ledger through the blockchain technology. So these are some of the high level topics that I think he really quite understood, Taleb. Now he opens up with his comment number one, pretty bold, right? Why Bitcoin is exactly zero. And I think that's a really bold statement, right? And he basically goes through paragraphs and paragraphs explaining that. But if you just read the first sentence here, gold and other precious metals are largely maintenance free. That's not true. That's not true. That is not true that gold and other precious metals are largely maintenance free. I mean, that's just wrong. I mean, think about all the mining facilities, think about all the processing facilities, the supplying shipments, and not even that, guys. Like, obviously, now when you go and buy gold through your banks, through your whatever that is, you're not actually going getting a gold bar most of the time. You're just getting a certificate or some sort of proof that you purchased this amount of gold, and that gold is stored somewhere, right? That gold has to be stored somewhere. I mean, technically, the gold bars and the gold themselves that we're mining out of the earth were stored somewhere, right? So all that mining, all that storage, right? Those are real estate storage. Those are actual physical storage that takes space in our in our planet, right? And I think that's unfair to say that it requires largely maintenance zero. And to me, again, I know that's not necessarily the point he's trying to make, why Bitcoin is exactly worth zero. But stating a fact that is completely wrong to me shows to me that he's more focused on making a statement about how gold and other precious metals are so good that Bitcoin has to be worth exactly zero because of X, Y, Z, right? And I don't think that's the case. I don't think that's the case, and I'll be reiterating that throughout the paper. But the newer generations, such as mine and other newer generations coming up, we have zero interest owning gold. We have zero interest owning precious metal. And I'm generalizing, right? I'm not saying every single individual in the 20s or below 20s are staying completely away from precious metals and gold. But the general population, guys, if you go on Snapchat, if you go on Instagram, if you go on Twitter, if you go on Reddit, no one's talking about owning gold, okay? Unless you're like over 40, 50, maybe at that point, maybe that's your thing. But if you're in the newer generation, you're just not talking about owning gold. And my point here is that to say that, it is exactly worth zero is actually wrong, just on a factual basis. That if you ask me in 20, 30 years, which are the 18 years old and 19 years old, will they want Bitcoin, right? And the answer is we don't know. That's really the answer. But I also can say for a fact that it's not going to be worth exactly zero, because worth zero means that no one in on this planet wants a single piece of Satoshi, a single piece of Bitcoin, right? Not even a fraction of it. And to me, again, if it's just a question of demand and supply, obviously supply is limited, so we know that for a fact. But if it's just a question of demand, just think about this, guys. Like, you can use all your formulas and your statistics formulas that you learn in school and so on. But if you just step back for a second, right? If you just step back from the theories, step back from the research papers and theories and textbooks, and just think about this, right? In 15, 20, 25 years, 40 years, 50 years, will Bitcoin be worth zero, which means that no individuals on this planet will be willing to pay, 0.00 whatever dollars at that point, whatever currency we use for Bitcoin. I think that's wrong. I don't think that's fair to state, and I think he's making a ultimate assumption here that, to me, the paper is flawed just based on that statement, right? But we'll continue. We'll go through the paper here. Again, I don't want to go through every single piece of the paper because, one, we don't have time, and two, I'm not literally, going to read the paper word by word for you guys. I mean, you guys can obviously read the paper on your own and come up with your own conclusion. But for me, I had a chance to go over it, go read it, and I highlighted some points, which is what I wanted to talk to you guys about, right? And here he says, he's talking about technology, right? Technologies tend to be supplanted by other technologies. Over 99% of new is replaced by newer, whereas items such as gold and silver have proven to be resistant to extinction. So, first of all, these are arguments more for gold and precious metals, rather than actually stating the argument that Bitcoin will be worth zero, right? And I think the problem here is that he's basically stating that, hey, gold and silver, you know, has been resistant for millenniums, right? But here's my comment to you, right? And if you're going to make bold, accept, like, bold extreme statements, let me make one for you for precious metals, right? What if there's a rock, right? A meteor that comes from the galaxy, right, from space, hits Earth, right, and lands on Earth somewhere in Africa, whatever. And this rock, this meteor, has so much gold on it, right? So much gold on it that it like triumphs the gold on planet Earth, and it's exactly the same properties. What happens to the price of gold, right? Supply just increased significantly, right? And again, I think that's a ridiculous statement. That's why I'm not even going to speculate on that idea. But who knows how much gold there is on this galaxy, right? You cannot say that there's this much gold in planet Earth. First of all, you can't even say that. I think there's like 2% of gold mine every single year. First of all, this is not largely maintenance free. There's actual work being done to. There's energy being used to mine gold and precious metals. There's energy being used to store them. There's energy used to promote them, to market them, to have personnel working for them. So to me, this is absolutely, these are statements that are trying to push the storyline for precious metals and using that as a zero sum game against Bitcoin, right? And to me, that's completely unfair. I think gold and precious metals have their own place in our economy. I think there always will be people that will be backing those, especially older generations, at least for the next 2 3 decades, right? But I think it's completely unfair to say that just because gold and other silver, precious metals have those properties, Bitcoin is going to be worth zero. I think that's completely unfair. I really do think that's just a argument that's just leading you to a rabbit hole that you shouldn't have even begun with, right? So another argument here says that the difference between current Bitcoin bubble, again, he's sort of in stating, like he's basically coming up with an argument that he shouldn't have begun with, right? Because who are you to claim that we are in a Bitcoin bubble, right? I personally think that the price got spiked in the recent months, but who are you to say in a paper where you're trying to debunk and trying to state the fact that Bitcoin will be worth zero? How can you state that we're already in a bubble? Okay, that's completely unfair. I think again, these are statements that you have to watch out for, because what he does is that he uses the fact that it's in a current bubble, and he compares that with the dot-com era, right, in the late 90s, early 2000. And he's saying that, well, these companies in the late 90s and early 2000, at least they had some sort of a revenue income, right, or promises, right? And again, if you think about it for a second, you're like, yeah, that is right? But just step back for a second. First of all, we're not in a Bitcoin bubble. We are so early in the space, right? Adoption rates are increasing every single day, every single minute of the day, right? For the past years, we are so early still. Bitcoin was founded in 2009. We are in 2021, and expected that the growth will happen. The first country adopted it just a few months ago, El Salvador, right? There will be other countries adopting it. Institutions, just a few have actually dipped their toes in Bitcoin. Wait until others add it to their balance sheets, and wait until companies actually build applications on the Bitcoin network and adopt other types of cryptocurrencies. This is when we talk about adoption rates maturing, right? We're not even there yet, right? So to call it a Bitcoin bubble and to compare it with era of public stock markets where the companies were sort of delivering on false promises to raise cash to pay for their houses and their private yachts and their private uh, their private items. I mean, this is fraud. I think this is bad. This is not good. These were dark times, and the markets reacted to those. And that time is completely different from what Bitcoin is, right? Bitcoin is a technology. It's a protocol. For the first time in human history, humans can invest in the protocol. You couldn't invest in TCP/IP. You couldn't invest in HTTP. You couldn't invest in specific protocols such as radio waves, or even before that, where energy transmission lines and so on. You couldn't invest in those protocols, but for the first time in human history, you can invest in a protocol that over time will be adopted a lot more by different countries, different communities, different companies, different societies, and that will yield you benefit, right? This is what you as an early adopter get. So to me, just comparing apple to oranges. Let's move on to number two here. He says that, for the success of a digital currency, right? Transaction in Bitcoin are considerably more expensive than wire services or other modes of transfer, or other ones in cryptocurrencies. Magnitude slower than standard commercial system used by credit card companies. Anecdotally, while you instantly buy a cup of coffee with your cell phone, you would need to wait 10 minutes if you use Bitcoin. So they cannot compete with the African mobile money. Nor can the system outlined above, has there as per its very structure, accommodate a large volume of transaction, which is something central for ambitious payment. Today, 12 years into life, in spite of all this fanfare, with the possible exception of the price tag of Salvadorian permanent residents of 3 Bitcoin, there are currently no prices fixed Bitcoin floating in fiat currencies in the economy. Okay, a couple of points here. First of all, um, transaction being more expensive than wire services and other types of transfers. Let's talk about this, right? First of all, in his paper, in Taleb's paper, in this black paper, there was never a mention, there's no mention of the Lightning Network. Okay. So Bitcoin, obviously the source code, all of that is on layer one, right? And what Lightning Network is basically a layer two system where instead of interacting with layer one system directly, right? Because it is intensive in terms of work, and yes, fees can get high. Yes, it can get high, and yes, the time could be several minutes, perhaps not 10 plus minutes, but could be several minutes. The Lightning Network makes things instant. It makes fees almost non-existent, if non-existent. And to me, the fact that he didn't even mention the Lightning Network shows to me that he has little knowledge about the progress of Bitcoin. He has little knowledge about the space of Bitcoin. And this is most important thing. He has not gotten in contact with Bitcoin maximalist supporters in 2021 prior to writing this paper. I truly believe this. He probably read some posts on some Bitcoin maximalists. He probably saw some interviews, but the fact that he didn't mention Lightning Network in this paper and specifically stating about the speed, transaction cost as well, I think that just shows that. I think that just validates that theory. And I know Peter McCormack in his podcast with Anne Lynn, he said the same thing. And to me, I'm completely in line with that thesis. I think he's missing some knowledge here. The fact that he says that they are more expensive than wire services. Have you ever transacted, you as a viewer, guys, have you ever, gotten a wire service from bank to bank? You guys know how painful that can be. You guys know the fees can be very high. For example, Western Unions, they take like 30 to 40%, right? We know how remittances are literally the bread and butter for many countries, specifically for countries like Tonga. We saw that in our channel. We talked about it. And to me, this is completely unfair to compare Bitcoin layer one system with other layers that are so complex, right? Western Union's credit card companies, right? Credit card company is not layer one of cash, right? Credit card companies are not layer one um, systems of fiat currencies, right? These are complex layers that were sort of set to help transaction costs and speeds, right? And that's exactly what the Lightning Network is doing. So to me, this is unfair. I think you read these types of papers and you're sort of thinking, yeah, it makes sense, right? You can't buy coffee, at a reasonable cost without fees, and you have to wait 10 minutes. But then you use Strike, which runs on any application, your iPhone, your Android, and it runs on the Lightning Network, and it has almost no fees, and it's completely instant. We saw that in videos. We showed that in the previous videos in our channel. Another topic here is starting talking about some basics of economy, right? Such as income must come from somewhere. Say an employer puts up a salary fixed in Bitcoin, she must be getting revenues fixed in Bitcoin, right? He's talking about how the whole economy has to shift towards a system where people get paid in Bitcoin, suppliers and processes and so on. But then he states something like government employees and contractors get paid in fiat currencies. Taxes are collected similarly in 2021. Of course, we are in 2021. Again, you're repeating something that we all know. Like even the most Bitcoin maximalists know this. But what you fail to mention here is that Miami Mayor Francis here, he actually mentioned that you can now be paid in Bitcoin in Miami City if you work for the City officials, right? So to me, this is a statement that for one is false or is not complete, and two, again, you're sort of reiterating that we already know in 2021, most people are paid in fiat currency, if not most, like 99 plus percent, right? This is normal. Your salaries are paid in big fiat currencies. This is fine. This is not anything revolutionary what you're stating here. To me, when you state these types of statement, it just shows that you're trying to reiterate the common sense for what it is in 2021. The question isn't what is it for 2021. The question is what happens in 10, 20, 30 years, right? We don't believe that will be the case anymore, right? We think people will have the option. If it's not Bitcoin, it's going to be another cryptocurrency perhaps, but we don't believe fiat currency will have that much of a dominance at that point. And obviously this is a huge task, right? Just look at the fact that this paper had to be done from someone like Taleb, shows that how powerful legacy systems are, how fiat currencies will take a lot more than just the Bitcoin technology. It will need its people. Ultimately, the people are the participant, right? Couple of notes here. He talks a little bit about, during the Italian national telephone tokens, he's sort of comparing this. He's explaining how displacing fiat is not easy. Obviously, it's not easy. It's literally the hardest thing to do in this planet. It's not. He's comparing like the Italian something that happened in the 70s. Again, these are. I mean, you can take like 100 stories. Like, why not just talk about the tulip era, right? In centuries ago, just talk about this. If you're just gonna pull out, some sort of theories, just to one flex and two to prove that there have been other examples in the past that have failed, right? But I think this is not really helping the fact of his paper, because his thesis is really that Bitcoin is going to zero. Ultimately, that is his thesis, right? I don't think that is reinforcing it. If anything, it adds noise to it. Um, it talks about other fiat currencies and so on. Let's talk about regulations here. And I guess as we conclude the paper towards the conclusion, he talks a lot about you know the regulations and government's role. And my thoughts here is that, first of all, no one is trying to run away from government regulations. No one's trying to hide anything on Bitcoin. The fact that is an open source code, right, that everyone can see exactly what is going on the public ledger, on the open ledger, and everyone sees what's going on, everyone can track transactions, shows exactly to me that no one's trying to hide anything, as opposed to fiat currencies where things are hidden from the public, right? Yeah, they are disclosed in paper, but do you really know what is going on behind the closed doors? You don't, right? I do know what's going on with Bitcoin. I do know that it is limited with 21 million Bitcoin supply. I do know what's going on in the every single transaction that goes. Am I interested? Probably not, but that doesn't mean that it's not there. It is there. Everything is logged. Every can see from point A, point B, what happened, and it can follow transactions. And that's exactly what here the FBI was able to do in May, right? They were able to figure out that some criminals were sort of using um, Bitcoin, and the FBI sort of followed those transactions from point to point, and ended up to a point where they could, because of KYC, know your customer rules, they were able to find a wallet where the individual name, address, and so on. And the fact they were able to do that shows actual power to Bitcoin. It shows that it is safe, it is public, it is secure, and it is perfect for governments, authorities such as FBI, right? That if they need to find criminals, they don't have to scramble through hidden papers and go through the whole process. Everything's on open ledger. If someone tries to commit fraud or do something illegal, you can follow the transaction and follow exactly where they are. And to me, that's bullish about Bitcoin, right? But Taleb doesn't really put it that way, right? What he talks about is he uses words, and this is what I really don't think this is a great idea for him to do. The belief in one's ability to hide one assets from the government. No one is trying to hide anything, right? I can speak this for many Bitcoiners, and I truly believe, I mean, there will always be bad people in anything in life, right? Most criminals, if not all criminals, use USD, fiat currency, US dollar, to transact with their drugs transactions, with their illegal transactions. But that doesn't mean that we should be bashing on USD because of that specifically, right? And I think that's a unfair statement to make on Bitcoin, right? You're assuming that people are want to be able to hide their assets from the government. You're assuming that the government, people are trying to, have Bitcoin has an edge against the government in a sense where it's a safe haven where the government will never be able to figure out who you are, what you're doing with it, and that's completely wrong. And also, I do want to mention though, Bitcoin is the only asset that no one can truly take it away from you, right? They can arrest you, they can put you in prison, they can strip you from everything, but ultimately, if you know the passcode for your wallet, which is basically 12 words, you just need to know the first words, right? You can figure out, guys, if you want to Google that, wallet passwords, if you want to understand what I mean by that. Uh, Ultimately, no one can figure out. Maybe if they find a technology at some point where it drills it in your head and they can see your thoughts, maybe at that point, finally, someone will be able to say, well, if they do all sorts of hops, they can eventually get to your Bitcoin. But ultimately, as we stand today, Bitcoin is the only asset that the government or any authorities cannot take. But again, we are leading in a rabbit hole where the premise was completely false to begin with. It's Bitcoin. It wasn't meant for illegal individuals. It was not meant for people to hide an asset from governments and to use it against the government if things go south. It wasn't meant to be that, right? What it was meant is as a store of value, is a transaction, it's a currency. Just like the Satoshi paper said, it's a P2P system where you can transact without the middleman involved, and it is free from any entity, organization, including central banks, to alter, modify it, and to basically print more of it, right? If the supply is limited, demand could be unlimited, right? That's the bullish point about Bitcoin. And again, this is a false state. It did not take long for the FBI to restore the funds. Again, this is because of the beauty of the blockchain technology, because it is open ledger, not because the FBI was able to hack into Bitcoin or whatever. Again, I know that's not what he's stating, but when someone that's not really knowledgeable about this space and that's not really aware of the Bitcoin technology, the network, you read this statement, you're like, oh, like the FBI can just hack into Bitcoin. It's these types of comment. That's what I want to make up. And again, these are, a comparison. He's talking escape of governments is similar to an advertisement in 1960s. Health benefits of cigarettes. First of all, cigarettes can cause cancer. It has killed many people. And to compare Bitcoin's narrative, which is false to begin with, but to put those types of statements here, to me, that's completely discrediting the paper, especially what his thesis is to begin with. And then he says here a concentration of insiders hoarding what they think will be the world currency, so others will have to later go on the supply. And I think this is what I hear a lot, especially with like individuals like Dave Lee, for example. He mentioned this a lot. Is like there's so many people hoarding on early on in Bitcoin, and I will say a couple notes here as I end this video. We're already like almost 30 minutes here. Let me just put a few thoughts here, and this is again, it's easy for me to comment on those when those types of statements are made, but to provide statistics, graphs, metrics, it's a lot harder. But there are everything that I would be saying, there are proofs for this, right? First of all, most people that actually bought Bitcoin early on, so right now, I don't know what price it is at right now, it's like in like 40,000 whatever US, but early on when it was like $1, $2, actually the saturation of people that sold, that actually held since then is very low. Okay, most people actually sold over the multiple X, right? And again, there are metrics you can calculate that. Again, because it's an open ledger, you can calculate wallets transaction. Can you be 100% sure? Absolutely not. That's why you have a percentage um, error there. But the idea is that I truly believe that most people actually really did sell over time, right? And Of course, people that bought like when it was $1,000 Bitcoin, $2,000 Bitcoin, and of course they're going to be incentivized to push this narrative to people to have more adoption because the price will grow, and eventually maybe one day they may sell their Bitcoin for fiat currency and then have a wealthy life. And here he's talking about people that will become eventually billionaires, earning trillions and become trillionaires. And that's why he calls it holders, and he's taking comparing them with evil civil servants. Here's my thoughts to you guys. Apply the same concept for public market stocks. Apply the same market concept for precious metals. People that bought gold early on and are holding to it, of course they want people to push the gold narrative up, the Peter Schiffs of the world, and have, a larger net worth, right? The same goes for public companies, right? If you bought Tesla early on, right, and you saw Tesla dip recently, you're sort of incentivized naturally just by the law of human nature to have your network increase, to push the narrative that Tesla is the best company out there. And we truly believe it is the best company in electrical vehicles as we stand. But of course, they have incentives to push the company. It doesn't have to be Tesla, right? It could be any other companies in the space. But the same could be applied to every single asset in the world, right? Real estate, right? If you live in Canada and you own real estate in Toronto, for example, and Toronto prices have gone crazy, right? You're not gonna go if you have a rational mind, right? Let's say you bought at the peak. Let's say you just bought Toronto real estate recently. You bought it at a peak, very expensive. You're not gonna go around saying, "Yeah, real estate is expensive. Don't buy now. Just wait." You're not gonna do that, right? It just doesn't make sense. You're bashing your own real estate. Your incentives are not aligned for you to actually bash your investment. You work really hard for your money. Of course, you want to hold it and sort of promote this narrative that Toronto real estate is amazing. The same goes for Bitcoin, right? Of course, people that bought in the 10,000s, in the 5,000, the thousands, and then been holding on since, of course, they want this Bitcoin technology to be adopted across the worldwide because they'll see their network grow. But again, this is an unfair statement to single out Bitcoin because you have to do that for every single asset. And again, I know a lot of people that are not involved in Bitcoin say exactly the same thing, right? Oh, there's a lot of people holding on. The moment you buy to it, there's heavy bags, they'll be selling and the price will crash. Again, that is FUD. That is what legacy media is pushing. This is what this type of paper is stating here. And to me, that holds no value, especially when you don't have metrics here involved. There are coin metrics, state all metrics you need. There are specific stats that tell you exactly how many people are holding, how many addresses have been dormant over the years, adoption rates increasing. To me, Bitcoin is here to stay. I think this is if his thesis is in one sentence is that Bitcoin is going to eventually be led to zero. If this eventually led to zero means like in thousands of years, maybe. I don't know. Do you know? I don't know. Leave it in the comments below. If you think that can happen in the next decade, let me know. I truly don't believe that. I truly believe there are newer generations that will at least assign a single cent, a single value to Bitcoin. Now, whether that is in the 100,000, whether that is in millions, whether that is in hundreds, that's for the public markets to decide, right? Let the public markets decide, let the people decide. Don't make these types of assumption that start stating that the FBI was involved, they restore funds, and people are hiding assets, and you're comparing Bitcoin with cigarettes, and you're comparing the inside concentration of insiders. I mean, this is unfair. That's not something that you want to do when you're trying to debunk the value of Bitcoin. There are other ways of doing it. To me, I wanted to go over this paper again. We went well over 30 minutes here. I want to end this video for sure, but I'll just end it with this, guys. I think Taleb has done his research understanding the basics of Bitcoin. I think he sort of has this personality, and I think a lot of people can confirm this through his interviews and through several inside conversations, that he has this personality where if he has a argument, he goes through this rabbit hole to sort of prove that he is right. And to me, the fact there's no co-authors in this paper, to me, the fact that he didn't mention any sort of mention of the Lightning Network, to me, the fact that he's comparing Bitcoin with extremes, and with the fact that he did not actually compare Bitcoin with layer one systems in cash fiat currencies, to me shows a lack of understanding about the progress of Bitcoin, about the unfair comparisons. And to me, Bitcoin is being compared and is being stated unfairly by legacy media. And to me, that just shows that Mr. Taleb has been more viewing legacy media and individuals such as that type of individual that aren't really involved in this space, as opposed to actually doing your due diligence and being involved with conversation. Have conversation with people like Greg Voss, have conversation with people like Anthony Pompliano, have conversations with people like that run these types of these networks that have a lot of knowledge, that have people that can answer your concerns and can answer your questions. And if you're ultimately, if you're still not convinced, then perhaps you can make that argument stating those conversations, mentioning those terms like Lightning Network, and mentioning your bearish terms, and then perhaps that could make a credible paper. But to me, this paper unfortunately is not that credible because of everything I explained. Hopefully, you guys enjoyed this. I went on a ramble here, 30 plus minutes. Wow, this is crazy. It's a beautiful Sunday here. Hopefully, you guys get some time out. Hopefully, you guys appreciate this video. Like it, subscribe, leave a comment what you think about this black paper. What do you guys think about Bitcoin? What do you think about Tal's work here? If you are in agreement with him, let me know why. Let me know why I'm wrong. Leave it in the comments below. I'll read it and I'll hopefully respond to you. Thanks so much, guys. Have an awesome Sunday and keep working hard. Thank you very much.